We got the rain going. All right, where's my Zoom? There we go. I need video, please. Video.
You should be able to just hit video. Is it not showing up for you?
You cannot start the video because the host has stopped it.
Okay, I'm gonna make you host. Go try it now. If not, then I'm gonna go back into Zoom and see what's up with Zoom.
Now it works. Wow, look how
All
good
right.
on camera.
Nice
Uh,
hat.
Let me know when we're on YouTube.
You are all good on YouTube. It just started like 40 seconds ago.
Where do we post the link on Zoom or YouTube?
I'm gonna put it on your YouTube. Did you want me to put it on your Zoom? I'm sorry, on your Telegram. Here, let me drop it in here real quick in case anybody wants to hop into his YouTube for a better experience.
Oh, I scheduled it on my YouTube with the thumbnail of me, but it just says Lance.
I'm having Joey fix that.
Here, let me show you. Let me get the screen. You know what I bought? The toast calls. It's up a little bit. Yeah, Tesla, big gap up. I know. Big gap. $10. You know why? Because everyone else is short it. That's why I wanted to get long it today. Um, Let me grab the screen. Oh, let me hide my account numbers. All right, should be good to go there. Thank you, thank you. All right, let me see how we look on YouTube. On YouTube, there's no screen though.
YouTube has
Oh,
a slight delay. You've got like
I
a
see
30-second
now.
delay. Yeah.
Yeah. Okay, perfect. Now I just need to cut the music off. All right, we got YouTube up. So you could go on Zoom or YouTube, whichever y'all prefer. No biggie. You know what I'm saying? Turn on after hours here. It's raining cats and dogs. And we'll get rolling here in about a minute. How many people are on YouTube?
Well, YouTube just started, so you got to give it 1 second to actually get people into it. It looks like right now you have 10 viewers, but we just started it, so that's gonna just keep going up.
Oh, okay.
Also, guys, replay is gonna be on YouTube. It's on his stream. So as soon as he's done talking, his YouTube video will be up and posted.
Ooh, Teslita. All right, let me know when we can start.
Oh, you can start whenever you want. Yeah.
How do we only have 56 people?
I'm gonna check if the email and stuff went out, but partially because early, partially because Roger's doing something right now. His kind of overlaps a little bit, and Jeffrey is doing something right now.
Oh, well,
They have some of that slight overlap with them.
do the opposite and you'll make a lot of money of what the crowd is doing. So let's get into it because let's first start with the week review. So I'm going to show y'all something that professional traders use as a guide here. And so you can use it too. Let me go ahead and pull it up. Let's get ready for the week ahead. So I'm going to find this for y'all. La-di-da, la-di-da. All right. So this is looking forward. Let me make sure it's the right date. Yeah, it is. All right. So first thing we want to do is see what's upcoming this week. So maybe get a pen and paper out if you want. And just note, we do have Palantir, analyst investor call. PayPal, Bank of America. What did we see Friday? Some Bank of America calls. So make a note of that. Right? We saw some big bank calls on Friday. And the March 7th, 45.5 calls, 250,000. We have Amazon investor call, RCAT, one of my favorites. Let's also take a look at some of the big earnings this week. We got Cart, Cava, Lemonade, Caesars, Workday, which we saw some Workday calls for this week, the 260s. So want to grab some of those. Thursday, we got Pizza. They had a buyout rumor. You also got Dell, HPQ, a few other names. And let's go ahead and look at the most important thing. So, does anyone follow the fear greed index? Let me know in the chat. Who follows the fear greed index in the chat? Okay, good. So what does it mean when we're on fear? So right now we're on fear. What does that mean? That we're in fear, aka doomsday almost. We're in fear. So what does that mean right now? Don't know? Don't know? People are afraid to invest, Rob says. Exactly. Good morning. So when people are scared to invest, what's usually going to happen to markets? They're going to go up, right? When people say stocks are breaking out, we're usually over here. And greed or extreme greed, and that's the time to sell. So think of it this way. Fear index, split it this way, buy under 50. This way, you want to be net sellers. And why is that? Because you want to do the opposite of what everyone else is doing. For example, does anyone recall getting maybe newsletters, Telegram updates of people saying stocks are breaking out last week, right? And what happened to the markets? They went straight down, right? So that's a good gauge. So keep note of that. Maybe you watch Kramer or you get a newsletter or you follow people and they say, hey, stocks are breaking out. They're looking good. When they do that, you should take the other side and be a contrarian to that point of view. Because if Kramer, who's got millions of followers, is saying, hey, now's a great time to buy Palantir stock, what happened the next day? The stock went down because you have all these buyers come in. And then what's the easiest point of pain? To the downside. If buyers came in, the stock went up, there's no pain. The market's always going to go where there's the max pain, right? So think of it. It's not about, is it a good stock? Is it a good time to buy the S&P? Play your opponent's hand. So if we look what rallied, what's top? Energy, healthcare, communication, materials, financials, basically all safety. Why? Because we're in fear. So all safety, healthcare, energy, high dividends. So what we should see is money come out of the high dividend safety stocks and into risky stocks. Very risk or You're wondering what names? Look at these names that have been hit the hardest for the week. AC, Palantir, MGM, United, CMG, App, Datadog, ARM, Crowd. These stocks are probably going to go up the most this week. And the stocks that are going to go down the most, look at this: healthcare, food, 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 food. These stocks are going to go down the most because investors are going to rotate out of safety into high risk if the market holds, which we'll see here at the open. All right. And then here's just some more economic data. None of that matters. But let's get into the week this week, because really, all we really care about, obviously, is a day-to-day point of view. Okay. We don't really care about what happens, next week or later in the week. We want to plan for this week. So what do we have this morning? We got a little gap up, or you might know this as a dead cat bounce. The dead cat bounce is basically after a big sell-off, the markets get a little bit of a bounce higher. We need to confirm that with the market internals at the open. And let's look at the overseas market, basically flat, flat. And then, again, this is just more of a dead cat bounce higher. So nothing really concrete. But let's get into what you should be making note of this week. So write this down if you want. If you don't, no worries. So what do we have this week? Palantir. Investor call. This name has been in the media a lot lately. So Palantir, cyber, so cybersecurity stocks. And then Teva. Teva is a healthcare stock. Have we seen any Teva flow lately? Because Teva, you could get a big advantage on that one. No, we haven't. Palantir has all the eyeballs, so you probably want to sell premium if you trade it, not get too crazy. And then what else do we have this week? We got some Voozy insider buys, which they always do. Here we go. So let's look at what the analysts are doing. They're upgrading stocks like Wing, XPEB, a China ADR, RTX, Phoenix, Aluminum, Babita, BBWAI, so retail. So let's take a look at RTX flow, Lockheed Martin, Twilio, that's a high growth mover. So you got some rotation already into risky stocks, free market, APA, energy. You can also look at Oxy. And then your downgrades are in Lucid. Lucid has earnings this week. So Wall Street is downgrading a stock on earnings. What's going to happen to the stock normally? It's going to go higher, right? Rivian downgrade. What's probably going to happen to Rivian this week? Go higher, because Wall Street is downgrading it. And let's take a look at the short interest. So right off the get-go, we're getting two opportunities. Rivian, let's see what the short interest is. So short interest means people betting against the company. And look, I got an ad for Rivian. So the short interest is about 19%. So that means out of the shares available, 19% of the shares are short, meaning people are betting against the company. When people bet against the company and it goes up, it causes a short squeeze, and that leads to aggressive move higher on volume. So Rivian, we should all be keeping an eye on this week. And then it is also going to have correlation, excuse me, with the Lucid Motors. And have we seen any Rivian flow? Yeah, we have. Deep in the money Rivian calls for 350,000 bucks. The Rivian weekly fives. So that's a stock replacement. That's a high delta in the money trader who's saying, I don't want to deal with the pricey options. or guess on out the money options, I want almost a 1-to-1 stock play. So I'm buying the deep and the money calls. So that's a good bet. Lucid. Let's see if the penny option scanner had anything. Lucid is a penny stock, obviously. Look at this in Lucid. These are straddles. All right. So some straddles in Lucid. That doesn't do much. Calls and puts. But Lucid, the short float is about 22%. That's pretty high. Now, are these companies good? Probably not. But that doesn't matter, obviously. All right. Let's keep going. We got big earnings this week. Let me pull up a calendar for y'all. So obviously, most of the movers are not going to be the S&P. They're going to be earnings, right? So let's look at an earnings calendar. And then we also have some company PRs, Lay's, Getty, Teva, Bristol Myers, Apple investment in the US. So Apple, Apple can move. And of course, it's down pre-market. Oh, there goes that. Names like Apple, you really don't have much advantage in trading. So if you do trade Apple, you're basically just trading the market. So I personally would never touch a stock like that because, you really have no advantage. There's too many smart minds trading it. But let's go into the earnings calendar because we got a lot of big movers this week. Let's first start with Workday. Oh, I got a package delivered. All right, so here's an earnings calendar for the week. So if you want to take a screenshot, feel free. Because these are names we're going to be trading. And number one on my list, not NVIDIA. Oh, it's my cows. Not NVIDIA. Why aren't we not trading NVIDIA? Let me hear it in the chat. Why no NVIDIA? Why no NVIDIA today? This is no slide deck. This is just me riffing. Why no NVIDIA? Everybody's trading it. Tom is spot on. There is zero advantage in trading NVIDIA. Everyone is looking at it. It's just like trading the SPY. Why would you want to trade against the market makers which have priced the options to perfection? The PhDs, the smartest of the smart. Nothing in NVIDIA is going to be unknown. NVIDIA markets are efficient, right? Meaning everything is priced in. Not only the stock, but also the options. Just like S&P. There's a reason why pro traders sell premium on stocks like MSTR, SPY, NVIDIA, because there's very little money to make if you're trading them directionally. Now, what is a stock that you can trade directionally where you're not competing against everyone else? Where we've seen option paper. And it's a name I already mentioned, and it's this bad boy, Workday. Workday, WDAY. So type it in and look what happened already. Look what happened here in Workday. Over $500,000 in weekly 260 calls. Let me repeat that. $500,000 in these 260 calls. So let's go to Workday. Stock is what we call consolidation. Think of it as a spring. The more it's compressed, eventually it explodes in one direction, higher or lower. This trader who spent the 260 calls, these are at the money calls, Now they're, $3 out the money, but that's chump change. Is the stock a gapper? Yes, it is. When does it gap? 4 times a year. When? Earnings. So this is what we call a gapper. This means the market makers, the traders do not know how to price the stock on earnings because there's a lot of unknown. So what they do is they panic and they get scared, right? So if we look at the options, let's go ahead and look at the 260 calls. There they are, sticking out like a sore thumb. Look at open interest and volume. Well, volume, obviously, it's pre-market. But look at this. Does this trade a lot of stock or options a day? Not at all. It's only trades 7,000 shares pre-market. It probably trades maybe a couple thousand options a day, right? So this trader who bought 1,200 calls, depending on how much open interest was, that sticks out like a sore thumb. So that is a trade. And do we have any in the money puts? No. We have out the money puts that could be premium selling puts, which is bullish to neutral. But this trade sticks out like a sore thumb in Workday. It's a big impact. Basically, would you want to fish in a lake that's huge, Lake Michigan, and try to catch a 10-pound bass, which is very rare for those who don't fish? Or would you want to fish in the golf course pond where it's super small and all the bass are 5, 10, 15 pounds? You want to fish in that lake because it's got all the big bass and there's not a lot of competition. You don't have to go searching. So this is a trade in Workday I would hyper focus on. Hyper. And if you're saying, Lance, these are expensive, $10, true. But the market maker move, which is MMM, is about $22. So 22 plus 255, that's about what, 272? Let's just round easy math. So those calls would double in value. Or of course, you could do a warped option, which is a bull call spread, if you want to trade it that way too. So we'll look at that one later in the week. And let's just say a 10% move, a big move for Workday? 260 to 240, nope. 230 to 260, nope. 260 to 220, nope. So it's well within the implied move. 10% is not much for this stock. And you got some overhead resistance, 280, 290. So you could have what we call a greater than expected move. If the stock misses earnings, it probably prints down here, 235. Options go to 0, but it's well worth the shot, in my opinion. So it's a good risk versus reward. Does that make sense? But let's continue to go because we only got 30 minutes and we got more names to follow. All right. So Workday is numero uno on the list. That should be a name to consider, take a look at, put your Girl Scout cookies on display and eat the whole box. We also have some names like Zeta. Look at Zeta. Look at this here. Small stock, high short interest, big gapper, double whammy and call flow. Another name, hyper focus on. So my goal here is to get y'all thinking. Let me know if you're on YouTube too. All the people on YouTube, write this down as well. My goal is to get y'all looking at these different stocks, not trading the S&P or trying to time. You want to day trade the E-mini S&P? I give you 1,000 go-tos. Love it. That's what I used to do professionally. That, NASDAQ, long bond, crude, mostly S&P, the SPOOs. But what I want to do is get y'all in the mindset of finding these small stocks that are outliers, not really small, but not trying to time where Nvidia is going or the S&P is going, because that is a disaster to lose money in this market, especially when we're gapping up and down every day. So let's look at Zeta. This is a name, crazy stock, insane. Love it. The stock got cut in half here. Cut in half. Gap up, huge. Volatility out the booty. But we saw some in the money calls, some slightly out the money calls. So I'm very curious if we start seeing this Zeta continuation. Now, the options are juice, the 20% implied move. So not for the faint of heart, right? But there's a reason they're juiced. We also have some names coming up, Joby, and this one, AI. So C3 AI. What did we see last week in this stock AI? Option flow. Very rare you see option flow in this stock. July, 32 and a half calls, 403,000 bucks. That's a big bet for this stock. Anything over $250,000 in these little stocks is a real big bet. So AI is another name to consider. Why? Chart is horrible. Pulled back to prior breakouts. So back into support. So all these people here, down money. They puked, they sold. So what happens if the stock goes up? These people in here who sold, what are they going to have? FOMO. They're going to chase and buy it up. So again, think of what everyone else is doing. Everyone's short this stock. What's the catalyst? Earnings to drive it higher. Big option paper behind it. Those are setups you want to look at. And let's look at the short float on the stock. And we got an ad. No ads. 20%. Love it. Oh, beautiful. Huge short interest. 20%. Mwah. Anything over 5% is a lot. 10%, you're really getting juicy. Beautiful. Beautiful setups. All right. Now, if you need the news flow scanner, maybe Deanna will post the link. If you don't have it, you are literally trading blind. And I hate to say that, but it's true. You are. You'll be 100% dependent on it. But in the last couple minutes, let's take a look at some of the indexes. And what I want y'all to do is look at prior support and resistance. And you can actually put this on your chart. Okay. So the E-mini S&P, this is the most liquid future, what professionals trade. Put your levels on. Prior high of the day. So 60, 68. Prior low of the day. 60, 41. 60, 41. You break out higher over the high on volume, stocks are going to catch a bid. You break out lower, where are stocks going to go right back? Into value. Support. 60, 30. If we do this at the open, do not buy call options in the first, or put options in the first 15 minutes of the day, because the market makers are going to jack up implied vol. So wait. You could have good opportunities around lunchtime. Let vol come out of the market. Don't try to be too early. And then if we look at the Russell, which is probably the most interesting index, futures are RTY. You see we're up a little bit more percentage-wise than the S&P. So small caps took the biggest hit, or you go look at the IWM on Friday. The Russell is going to be the most sensitive. And what I'm personally doing, because I can only tell you what I'm doing with my money, is I called my big account manager and I said, we're going to start building a 200K position. Basically, I have a lot of liquid cash, getting a little over 4.5%. Pardon me, 4.2% right now. And I said, we're going to start building a big position in small caps. Why small caps? They're the most sensitive to interest rates, and Trump being in president should help those smaller companies get financing. So the most growth, which makes up of mostly energies and financials. So small caps, I said, hey, let's start building a position over these next few weeks if we keep going down. So in the Russell 2000. And if you look at a year to date, it's the most lagging. In my opinion, trying to time the Mag 7 here is a little rough. It's going to be a little difficult to do. Okay. And that's just being honest. So like names like Apple, Microsoft, Google, all that kind of jazz. You see how they're already flirting pre-market with some nasty ass price action. Look at this. So I'm a little scared of those names. If you recall, in the warped option service I have, my new one that I launched earlier this year, the timing could not have been any better. We literally sold Microsoft warped options, aka bull call spread, 50% profit around what, 418, 419. And look what happened the next day. Sold off $10. So I would be very, very cautious, defensive on those big names out there, especially too with NVIDIA earnings upcoming this week. All right, gang, make sure you like, subscribe on YouTube. We'll do this tomorrow. Hope y'all got value. I got to go. I got to trade. Deanna, I'm out. Thanks again.
Bye.
And then watch check. We're rocking the Rolex Sky Dweller, Champagne Dow. We'll start doing watch checks every day too. Thanks again.